Good afternoon, everyone. Welcome along to this EduGrowth and Austrade webinar, looking at the Export Market Development Grant and the Export Capital Facility that is available to Australian EdTech and education providers, and some changes that have happened recently. I'm David Linke, the Managing Director of EduGrowth. We are Australia's EdTech and Innovation Industry Knowledge Hub. We were founded in 2017 by some leading universities: Monash University, Deakin University, La Trobe University, Griffith University, Charles Sturt, and Griffith University. And these universities, along with Navitas, founded us to sort of really try and capture the opportunity that exists for Australian EdTech to go global and to impact learners all around the world using technology. Our program this afternoon is really going to, before I do that, I should pause and acknowledge the traditional owners of the land that we are all meeting upon. We're spread across the country, so I won't acknowledge any specific set of elders, but I will pay my respects to their elders past, present and emerging, and especially to any Indigenous people that are with us today. It's an important component. I think it's the day after Sorry Day. So even a more important point to stop and pause, I think, about the relationship that Aboriginal and Torres Strait Islander people have with the country, our past, our present and our future. So thank you for being with us today. Today, what we're going to do is we're going to look at how the exporters can access some grants to help them build their programs, and also the facilities that are available through the Australian government to try and help finance some of your export. I'm going to begin by inviting Helene Luetchford, who is the Regional Manager for Export Development Grant Program from Austrade. Helene, do you want to turn on your camera and come and join us?
Yes, thank you, David, and thank you for the introduction.
Yeah, before we get into that, just a couple of little housekeeping things for everybody. There is a Q&A down the bottom. If you want to ask a question, you can put in there and we'll moderate some questions. We'll ask Helen and Suzy and Aleks a little bit later as we go along. There's also a chat. If you want to chat to anyone, you can do that. So what I might do is hand over to you, Helen.
Thank you, David. So thank you for all coming along today to find out a little bit more about the Export Market Development Grant. I have been involved in the grant for the last 12 years. The grant scheme has been running since 1974, and over that time has assisted over 100,000 small and medium-sized businesses. Can I just get the next slide, please? So today I just wanted to run through a brief overview of EMDG. The updates which David has referred to, they've occurred since the COVID-19 situation. I'll talk about what you can claim and also look at the steps to making an application. Next slide, please. Okay, so a little bit about the scheme. It's a reimbursement scheme, so it's not technically a grant. It's been designed to support small and medium-sized businesses. So that's those with a turnover of up to $50 million. And obviously it's focused around exports and the marketing and promotion of those exports. We generally receive around 4,000 applications at the current time, and of those, 77% of them are small businesses with an income of less than 5 million. Next slide, please. So what is EMDG? It's a reimbursement scheme of marketing and promotional expenses. It provides a number of grants over the years. The maximum at the moment is 8 grants over the life of the business. So they don't have to be in consecutive years. They can be in strategically placed years throughout the business promotional plan. The minimum grant is 5,000 and the maximum grant is 150,000, and that's subject to available funds. We do use a split payment system, and that is to ensure that there's all of the applicants that apply for the grant get some amount of money. And if we do end up being oversubscribed, then we use a proportion across the people who remain to ensure that everyone gets something. So what we do is we pay up to a certain amount. This year that was 40,000, and then after that, between 40,000 and 150,000, that's the amount that is paid at the end of the financial year, subject to the availability of funds. Now, for this year, we have had a bit of a change to that. So this is part of the update. For current applicants who've lodged an 18-19 financial year grant. Can I just get the next slide, please? So in 2020, we obviously had a bit of an issue with the COVID-19, and it's significantly impacted our exporters. So the Minister has added in an extra $49.8 million, which ensures that all of the applications that were made for the 18-19 financial year are going to be paid in full. So the payout factor is effectively now 100%, and all of the grants that are being assessed at the moment, so we're still processing those 18-19 financial year grants through until the end of June, those will all be paid in full. And the ones that were already processed prior to about April have also received their second tranche payments. Thank you. So in terms of who can apply, the grant isn't for everyone. So I do have to say that the grant is based on the EMDG legislation. That was obviously written in 1974, and it's written to make it applicable to all industries, and it obviously has to cover many different businesses. But in writing legislation, it obviously also excludes some businesses and some types of businesses. All of the rules are clearly provided on our website. We do have a lot of publications that help you understand who's eligible and who's not. And we do have an eligibility checklist. So if anyone is not sure whether they'd be eligible, I'd encourage you to use an eligibility checklist and to talk to us before you even think about putting in an application. Some of the businesses that we do support, though, are those businesses with obviously income under 50 million. But the key things is that they have to have a good that's made in Australia, or a good that's made out of Australia where there's a significant net benefit to Australia. So for example, if all of the design and development is done in Australia and it's just manufactured in China, and then all the marketing and promotion and distribution and things like that are undertaken in Australia, then there's obviously people who are employed here and we get net benefit from that. So there's a bit of a process around that, but that is still something that's eligible. We have tourism services. We have non-tourism services. So for education applicants, this is generally where you would sit. It's a non-tourism service, and it covers education services which are delivered within Australia and also outside of Australia, and also those ones that are delivered online. So, you know, obviously a lot of our applicants now deliver online courses, and that's also something that we see come through. Another one that would be relevant is obviously IP. So if you've done work on IP and you're selling a license to access your course, or you have some other kind of IP that you've developed in Australia and you're selling that to an overseas entity, then that would be also the type of business that would be supported. And then also we've got trademarks and know-how that were first used in Australia or developed in Australia. So again, some of the education businesses fall into those categories. And in terms of the actual spend that you're expected to make before you can apply, we're looking at $15,000 in a year, in a financial year. Or if you're a first-time applicant, $15,000 over 2 financial years. So again, it is a reimbursement scheme, so you have to spend the money first and then claim it in the following year. And I'll just run through that grant return is up to 50% of that amount that you've spent. If I can get the next slide, please. There is a grants entry requirement. So in order to apply for the grant, you do have to pass some basic criteria, and that's basically that you have enough money to carry out your intended activities. that you have actually got something that's ready for export. So you have to have an actual finished product or a finished service, something that you can deliver, that you've taken reasonable steps to prepare for exporting that product. So you've got some research around the markets that it's suitable in, that there's no kind of limitations in terms of legislation or registration requirements, that kind of thing. And also that it's not unlawful or not practical. So in terms of education, the things that we commonly see as a stumbling block are things like the delivery of services where CRICOS registration is required. If you don't hold the CRICOS registration and you do require it, then that's going to be a big issue for you. And also, you know, if you're delivering courses that need other registrations such as RTO or things like that, and within other countries, then you need to make sure that you have those in place. In terms of documentation, when you're applying for a grant, you would be expected to provide your financial statements for the previous 2 years, and also an outline of your business explaining what you're doing within Australia and internationally, and what you're planning to do in terms of exporting. If I can get the next slide, please. So we do have an export performance measure, and this kicks in from the third grant. So for the first 2 years, you're not expected to make export sales, but from the third grant onwards, we do have a measure in place that means that if you haven't made export sales, you'll be limited. Either if you have no export sales by the third year, you'll receive no grant, or you'll have a reduced grant if it's quite low. But equally, if you're making lots of export sales, then you'd be entitled to the full amount. It is a little bit complicated, and there is a fact sheet about it. So obviously, if you're in your second year and you're looking to apply for your third grant, that's something that you should be looking at. However, for the coming year, so this is the applications which will be lodged from the 1st of July 2020, and that's for expenses that have been incurred in 2019 to 2020. The Minister has actually announced that the export performance measures will not be applying to those claims. And that's because the COVID-19 lockdown has effectively happened in the second half of this financial year. And it's recognising that the expenses would have been paid throughout the year, but obviously the exports might not have been made in that same period. So the Minister has announced that just for the coming year, and there's no further announcement. So that means that the export performance measures will kick back in for the 2020-2021 year. So that would probably make sense more to people who are already claiming through the program, and it's not something that any of the first year applicants or potential applicants should be worried about. But it is good news for those who are potentially impacted by COVID-19 and have a decline in export sales or no export sales, that they still will be entitled to their full grant amount for their third to eighth claim in next year's round. Okay. So the application process, this is the date. So obviously I just mentioned that the applications will open on the 1st of July, and that is for the 2019-2020 financial year. They do open every year on the 1st of July. They close on the 30th of November for people who are lodging themselves. We also have a number of consultants who are, they're private businesses. They run a business lodging grant applications. They might do R&D, they might do EMDG. They do a lot of different things. You can approach them to prepare a claim for you. We do have a quality incentive program which we run, and the names of the consultants who can help you with those applications are on the Austrade website. And they have an extended lodgement period until the 28th of February in the following year. The payments, oh, sorry, I'm still just talking about that one. So the payments do reimburse expenses in the previous financial year. So again, it is a reimbursement scheme. And if you have any issues with the applications or you're not sure about anything, if you're in my region, you can contact me. I look after Queensland, WA, Northern Territory, South Australia, or I can equally put you in contact with the regional manager for New South Wales or Victoria or ACT or Tasmania. So we do look after the processing of all of those applications, and are always happy to help with any questions in regards to that. Next slide. Yep, thanks. So in terms of what the grant covers, it is pretty wide. It is focused on promotional expenses. So when I talk about that, I mean that we're not covering product development expenses. We're simply covering the promotion of a finished product, and it's the promotion and marketing expenses. So you'll see there all the different categories. So we've got the overseas representatives. This includes having someone employed overseas who has an office. They might have running expenses for that overseas location. And it could be one person, it could be a number of people. You can engage firms overseas. So it's pretty broad brush. It's very generous in terms of the amount that you can claim there. And the key here is to keep good records in terms of agreements and activities that those people are undertaking. The next category that we have is marketing consultants. So here it's domestic and international consultants who might help you with some promotional strategies, some PR, those kind of things. So again, these ones are usually a little bit more short term. So there might be a one-off engagement, and they are capped at 50,000 in the year. Then we have marketing visits. So marketing visits is probably our most common expense category that people claim under. This covers your travel to overseas to meet with potential customers, to meet with potential licensees, to attend trade shows, and to undertake all of those kind of promotional activities. We have free samples. So in terms of services, we generally don't see that claimed. That's more for people who are manufacturing goods. Trade shows, so obviously all your seminars, your trade shows, education expos, that kind of thing. Literature and advertising. So this is the type of expenses where you have your website, your Google, your Facebook, WeChats, all those kind of online promotional expenses. And also your traditional kind of magazine, flyers, those kind of print media. We have overseas buyers. So this is where you might bring a potential customer over to view the facilities or, you know, inspect the location where things might be undertaken. Not so popular for education, but certainly for manufacturing and things like that. And then we have registration of eligible IP and insurance of IP, and that covers off patents and trademarks. So obviously some businesses use that, some don't. It really just depends on what type of offering you have. So that is a really quick rundown. There obviously is heaps of rules around which things are eligible and which are not. I don't have time to cover them all, but I thought that would give you a bit of a snapshot in terms of what kinds of expenses we do cover. And I'd encourage you to look further at our website and all of the guiding material in terms of what we would cover for your business. Okay, so another update on account of COVID-19 is that obviously we anticipate that a lot of applicants for the coming year will have booked and paid for travel and trade shows, and then, you know, between January and June those ones have been cancelled, and so the Minister has also agreed that for the coming year, any of those expenses that have been paid and have not been refunded, i.e. they are an actual expense to the business and, you know, nothing has come of that expense, those will be treated as having taken place. So you can claim those expenses even though the trade shows, for example, didn't go ahead or the flights were cancelled, as long as the intent of them when you were booking it was that they were promotional in nature. So This one actually has been extended, so it will cover the 2019-2020 financial year and also the 2020-2021 financial year expenses. So because obviously the impact's anticipated to go through to the end of this year, and a lot of the trade shows, for example, in October have now been cancelled as well. So those expenses will just be treated as though they've taken place. And obviously that's to help with the cost of those cancellations. I would mention though that if you have received a refund, that you know, it's not actually a cost to your business. So in that case where the refund's being received, we wouldn't be expecting you to claim it. Next slide, thanks. Okay, so in terms of the process of applying, I do encourage you to visit our website. We have a number of coaching videos there. They are split into different categories. So if you just want to learn about, you know, what kind of overseas representative expenses you can claim, you can just listen to that little video and it'll run you through all the different bits and pieces. We do also have webinar sessions that run for about 1 to 2 hours where we go into a lot more detail about applying. And those will probably kick off in July. There's also a recorded one from last year, which we did. So that's always useful to log into as well. We do have a hotline, which is staffed by auditors. So you can ring that 132878. And then as you can see on the slide, we have the eligibility checklist and we have an online application. So all those applications are made through the website.
Hi, Helen, it's David here. Can I jump in for a second?
Yeah.
We've got a bit of time and I just wanted, there's been some fantastic questions in the Q&A and I know that we've got some Q&A schedule at the back end of this, but I thought seeing you're actually, and it's the most recent, before we jump into Suzy, can I jump in with a couple of questions? You can, yeah. Can I clarify just something because I just want to make sure that I've understood it because it's just helping everyone else as well. You incur some expenses in the financial year. So in this instance, let's take the example of the 1st of July 2019 through to the 30th of June 2020, right? The current financial year. You incur your expenses and then you make a claim between July and November. Yes. When are you advised what portion you'll get in a normal year? Forget COVID because that's a unique situation. When would you normally be advised? So the initial payment ceiling is advised in June. So that would, for the last year before COVID, that was the 40,000. So you'd be definitely expecting, if you claimed 150,000, for example, in grant, you'd be saying, okay, well, I'm definitely getting the first 40,000. The remainder then depends on how many people claim. So it really varies. Like some years we have like a 90% payout. The worst year that I've seen in the last 12 has been like a 25% payout. And that was actually last year. So it wasn't great. You do still obviously get a significant amount of money, but it's nowhere near the 150. And that's why there's been a lot of kind of campaigning to try and get full payouts. And I think we've just answered it, but I will just clarify. There is a question, can applications be backdated for 2019, 2020? The answer is yes, because you've got that window to apply until the end of November, right? Yeah, so it's always a reimbursement for the previous financial year. So the 2019, 2020 applications will be opening on the 1st of July, 2020. A little technical question here. Do marketing visits have to originate from Australia? Yes. So if you are in Singapore, an Australian-based company based in Singapore, and you go from Singapore, say, to the US for a trade mission or a trade show or a conference, that's not reimbursable? Well, okay, it's not under marketing visits, but if you're based in Singapore, you're likely to be an overseas representative, and overseas representatives can claim their travel under the overseas representative category. So therefore, yes, you would be able to claim it as an actual expense of the overseas representative. There's a question here from Mike Stevens, and I think we can answer for him really simply. Who do we talk about specific expense eligibility? There are a raft of Helen's, Austrade, and we'll connect you to them. Is that right? There's a couple of, you have a specific territory and there are some colleagues of yours with other territories. Is that right?
We do, but we do run that 1382878 hotline, which is staffed by
Even
auditors.
better.
So you can
Perfect.
just ring that hotline, and if they can't answer your call, it'll get referred to the regional manager. But if it's something about eligibility, then the auditors can always answer that question. Yeah.
I'm going to jump into one or two of these other questions here.
Sure.
Here's a really technical question, and you can feel free to bat it back to the 1300 number, okay? The 13 number, sorry.
Sure.
For overseas representatives, you mentioned staff overseas with an office. Can you clarify that this would cover salaries for employees or contractors, even if they have no office?
Yeah, sure. So yes, it is the cost of engaging someone based overseas. So that is their salary. And any kind of office expenses or travel expenses that they might incur. Also, you know, local printing, telephone, all of those kind of expenses that go towards having an overseas representative office. The thing I would like to clarify there is it is for promotion. So it's not like a delivery of services type office. So it's only the promotional and marketing staff that can be claimed there. You do have to have a written agreement with them, which outlines what their activities are going to be. And you should be keeping records of the activities they've undertaken for you. And also, I guess the important thing is that the business that's claiming in Australia has to have incurred the costs. So if they have an overseas registered business and that business is incurring the cost, then you can't claim it through your grant. It has to be something that's in the profit and loss financial statement of the business that's applying from Australia.
Yeah, so there's actually a really technical question here, which I think, again, we may refer back to somebody else, but let's ask it anyway, because
Okay,
I think
sure.
it's an interesting question.
Yes.
If I have a group of related businesses, for example, an IP holding company and an operations business entity, can I combine the expenses into one claim? I assume this means to ensure they get above the threshold, but as a general rule from what you've just described, well, actually, I'm not going to answer. I'll let you answer.
No, that's fine. So we do have groups of companies that apply. The key thing here is that, again, it has to be the entity that incurred the expense that makes the application. So if you have a group of companies, each company that's incurred expenses to do promotion would have to claim separately. So if you have an IP holding company and an operations delivery company, each of those would have to claim separately, and they would each have to meet that minimum spend of 15,000. So, but then if one business has incurred all of the expenses and that's, you know, that's it, then it's only that business that would apply. So yeah, sure. We do have a group of companies cap. So the maximum grant across a group of companies is 250,000. And we do some kind of whiz bang calculations in the background to do that, but it isn't uncommon. So especially when we come to technology and IP, because often there is a holding company to protect the IP. But just keep in mind that if they've paid the expense, they're the ones that have to make the claim separately.
Fantastic. Helen, thank you very much. We've hit this sort of time limit, and we've got actually Suzy who's going to come and talk to us. Let me just get my notes here. We've got Suzy Watson, who's the CFO and co-founder of Practera and has successfully received the EMDG grant. So we'll ask Suzy to get her camera on and her microphone, and Helen will come back to you maybe in the Q&A as well. Thanks very much, Suzy. You look like you're in a, where are you? You're in, whereabouts are you at the moment?
I'm in Perth.
Oh, wow, there you go.
So it's before lunch over here. And my last claim went through Helen's team. So
there you go. I'll let you hand over to you. You can share your screen and get going.
Great. Okay. Thanks so much for that, David. Okay, so my name's Suzy Watson. I'm the co-founder and CFO of Practera. I'm a 3-time startup CFO. And before that, I've worked in banking, mining, retail in both strategy and finance roles. I'm also an Australian Woman in Tech finalist. And this is just a little bit about our story around our export marketing. So Practera is an experiential learning technology company. We do two main things. We help educators build and deliver high quality real world programs on our software economically at scale. Experiential learning is things like team-based projects, internships, boot camps, accelerators, mentoring and skills credentialing. The second thing we do is run a projects network connecting Australian companies with students across a range of themes centred around a real world experience. We're lucky enough to work with a range of great customers and partners. In Australia, it's about 60% of universities, as well as a whole bunch of government agencies, including Austrade, and many SMEs. And overseas, we engage mostly with universities or educators, but almost exclusively universities at this point. I'm just going to give a really quick example of what it is we do, because I think it might actually be relevant for this audience. One of the programs that we run through our software is our Global Trade Accelerator. This particular program was developed with Austrade, the New South Wales Department of Trade and Invest, the Global Trade Professionals Alliance and Export Council of Australia. It's a program where exporters can submit a brief, usually a market entry strategy. So this may be a useful thing for people who are thinking about moving offshore. The university supplies students, and we register everyone on our platform, and this guides them through an experience of creating a draft report for that market. The exporter giving some feedback, and then hopefully at the end of it, the exporters get a really high quality research report on a market, and the students get a whole bunch of shiny badges and some experiential learning. We've run this a lot. If anybody wants to talk to me about it, that's the email address. But this is something that was developed with a whole bunch of trade professionals as a useful tool. I'm just going to give you a really brief history as to how we arrived at the EMDG claim, because it's actually the last government grant that we've claimed in a long line of government grants. So as a high growth tech startup, which I'm assuming at least some of the people on the call are, we were bootstrapped until 2017, which is actually pretty hard to do if you don't have VC funding. And in that time, we've participated in a whole range of either federal government or Oz industry or Austrade or related government agencies, including EFIC, pieces. So in that time, we've done the Accelerating Commercialisation Grant, the R&D incentive. And then around 2016, we had our first offshore customer, and we had a really good look at EMDG then, and actually decided against doing it. We could have met the eligibility requirements, but it wasn't going to be a worthwhile enough approach, because we weren't going to, the spend wasn't really going to be there to make it worthwhile. So we actually held off doing that until after we raised capital in 2017. And what we did do instead was actually go to EFIC, which I believe is now called EFA, and used a loan against that RMIT contract. But after the capital raise, that gave us a bit more money to play with. And we made a concerted effort to look at two very distinct markets, both of which had a different approach and different outcomes. And we resulted in our first claim going in actually in November or December of 2019, related to the FY17 and 18 and FY18 and 19 financial years. We did use a specialist. This particular specialist is our accountant. They also do our R&D claim, and they're obviously listed on the Austrade website. So I would recommend it. It certainly gave me a lot of surety that we were putting in a valid claim. If it had been left to me, I probably would have put things in that were ineligible, which I certainly did to them. They helped me understand the regulations, and we walked back their claim to the appropriate claim that fits within the regulations. And I think that was a worthwhile use of funds, because it did cost money, but I think it gave us a better claim that was cleaner and more appropriate for what this scheme is. What EMDG did for us is it gave us a certain level of surety to really invest properly in offshore. Offshore's hard, it's expensive. It's easy to say, oh, I'm just going to try this a little bit. But what we were able to do, knowing that there was an EMDG reimbursement, even though it's not always known because of the variability in the payout, is we knew we were going to get something back. And it did lead us to probably lead a bit more aggressively, and I think really helped progress that for us in a couple of our geographies. So just broadly, our software is B2B, not B2C. There's no consumer platform with which we can connect with our market on. We really need to be on the ground, and on the ground these days means something different, definitely with Zoom. But it is a sort of a one-on-one engagement consultative sales and marketing process with the customer base. As I said, our first entry offshore was with Vietnam and with an Australia affiliated partner, and that was supported by the EFIC loan, the SBL, which I think has been revamped. But after the funding, we made a concerted effort to move into a large developing economy in India, where a lot of people need upskilling from low skilled jobs into knowledge economy jobs, and that's part of what we do. And this was also underpinned by a Australia-India council grant, which we were already going over to India to deliver. So we managed to use that to leverage off for other contacts to make a more effective group of marketing meetings for our Australian-based employee, who would set up the meetings and then take multiple visits to that market to pursue that. In the US, we took a different approach and we engaged an overseas representative with a contract that clearly stated they were there for marketing and promotional activities and some of their KPIs around that. The US is really important to us. It's a developed education market as opposed to developing, and it is also where most of the VC funding for edutech is going to come from for the rounds that we're up to in terms of Series B and beyond.
Thanks very much, Suzy. That's great. Thanks for sharing your experience with the EMDG grant. And obviously, from what I can see, there's a whole bunch of grants that you've been eligible for and really helped build your business. So that's really a good thing. So thank you very much. We'll have you back in a moment when we have some Q&A as well. So thanks very much, Suzy. Appreciate it. Now we move to a different way of looking at export and how you might go about funding that and financing that. We're going to go talk to Aleks Henderson, who's the Director of Business Development, Western Australian Export Finance Australia. Over to you, Aleks.
Thanks, David. Thank you very much for having me as part of this briefing. It sounds everything is sort of matching in very well with sort of what Helene's covered off, what Suzy's covered off, and obviously where we come into it too, and we play a very crucial role in that space too. So Export Finance in Australia obviously have a very close working relationship with Austrade. Our interstate teams out of New South Wales, our Sydney office in Export House, sit in and co-occupy Austrade spaces. So we are based out of Western Australia, South Australia, Queensland, and Victoria. So like everyone else, this is our 9th week working from home, and webinars are sort of a way of life, but with such fast pace of change, this is such a very good platform of delivering sort of relevant information very quickly. So applying for finance in these days of time, it's very difficult. It's difficult as it is sort of dealing with banks. It can be frustrating, but you add sort of complexity of COVID-19 and impact on the economy. We're having sort of a lot of businesses reach out to us just to understand what the options are and you know, what can they do to get through this pandemic and sort of keep afloat. So today I will cover 6 key slides which will cover the areas of who Export Finance Australia is, previously known as EFIC, which businesses can we assist, what does this COVID-19 export capital facility look like that's been allocated to us by the Minister, and some of the examples of businesses that we have supported in addition to what Suzy was discussing with her example. And the last page, we sort of covered some resources for you guys to have, you know, and touch base with us if you sort of think that we can assist with funding. So on the next slide, a little bit about Export Finance Australia. I'll just wait for Karen. So who we are. So we are effectively federal government export credit agency, and we've been in existence for over 60 years. There's about 50 export credit agencies across the globe whose role is to support their businesses exporting overseas and sort of provide funding for those specific role and purposes. As an Australian export credit agency, we provide financial solutions, loans to businesses that export and having export related contracts. They provide product or any sort of services. We also provide value to the whole of the supply chain within the export. So within particular to mining, which is a majority of what WA transactions tend to be, we value the supply chain that provides goods and services to the end exporter. So if they are playing an integral role to that particular exporter, they can actually reach out to funding for us. These businesses do need to be very much commercialised and have a history of delivered projects. In terms of how we operate, so we're very similar to your traditional commercial lenders and to your banks, and we do apply sort of a very detailed commercial finance assessment basis. We also work very closely with the four majors, and in fact, most of our opportunities are referred to us by the banks where they've got clients, they have a fantastic product, you know, they're looking to launch overseas or they're growing overseas. Generally banks to get a little bit nervous with sort of offshore type related contracts and leveraging those debtors for funding, and that's the sort of role we play in. So part of our mandate is also not to compete with the banks, hence such a close working relationship, and our clients' first point of call should always be their bank and sort of ability to see what their local banker can assist with. Not everyone has that privilege, so we do tend to sort of play a bit of a role of connector and sort of refer back and forth to the banks to see how we can work together. So on the next slide, talks about who we can assist within this space. So as previously noted, anyone that's an exporter goes in the supply chain to an exporter in SME middle market customer space up to 150 million is where my team plays in. We do have a large corporate and business segment under project and structured finance team that cover anything over 150 million turnover. And those guys sort of focus on exploration and set up on mines overseas in different markets that are sort of Australian-based companies. So general parameters in terms of where we can assist our clients are, they need to be commercialised for at least 2 years. So then they need to have an existing product. So similar to EMDG, the product needs to be there, needs to be tested. It's not very much for your scale-ups or for your startup opportunities because our risk predominantly sits with ability to deliver on an existing product overseas. Minimum turnover of 250,000. Is where we sort of have that minimum requirement, but we generally tend to look at financing from $20,000 under the CBIL product. I think Suzy mentioned using our small business export loan, which is sort of a separate additional thing that we can do online too. Like I mentioned, we are not compete with the banks, and the products need to be a direct export or provide goods and services to the export supply chain. We can also look at businesses looking to expand overseas and set up operations, you know, offshore in offshore markets where they need they've got a new supply contract or they're looking to increase footprint in that particular location. Another sort of quirky thing that we do is we provide sovereign debt to other overseas governments to assist with purchases of goods from Australia, from an Australian exporter as such, where that we would facilitate lending to an offshore borrower or the government of overseas to facilitate that transaction. So a casing example for WA is Austal Ships. I'm sure you're all familiar with Austal Ships. They manufacture large vessels and they provide them in the overseas markets, and we are able to actually facilitate funding to some of those offshore governments and also buyers as well. Historically, I guess we're talking about the education sector and your specific area. We haven't had too many inquiries, to be honest, out of the education sector, and predominantly that's driven by, I guess, the type of industry that most of the education providers sort of play in, which is in advance payments for all of the courses, sort of, you know, for per semester, which seems to mimic the I suppose education side of things, and accommodation where there's overseas students coming in. A lot of those things are sort of paid upfront for a lot of period in advance. So cash flow doesn't need to sort of be dispersed by our facilities. That's changed somewhat. So we have actually a couple of transactions within the COVID impacted transaction, which I'll talk about in a minute, where we do have a couple of larger providers that have sort of 6 campuses across Australia and in India. They're in the higher education services, and they're looking at avenues of sort of maintaining the footprint or maintaining those international students by, you know, allowing them, rather than paying on semester basis, they're paying on sort of, you know, monthly basis, which is in effect impacting their working cash flow requirements. So we're talking to a few of those providers in terms of how we can provide, you know, ongoing assistance for that liquidity and their working cash flow. So on the next slide, we talk about how we can assist. So there are 2 main ways we provide assistance overall. To simplify, we can do a direct lending or indirect lending through a bank. So direct lending, we can actually provide lines of credit, we can provide loans, which would sort of be your traditional products you would get from the bank. However, because we are very much a point-in-time financier, we would sort of map out our repayment period or requirement for the loan based on the purchase order or contract that the client has. So, so Suzy mentioned a CBIL application that she's applied for in her business, which is for the Vietnam contract. So that particular funding would be very much mapped around what does that contract look like, what are the repayments and requirements for the loan, and we will be repaid out of the source of repayment out of that particular contract. So we're not a relationship lender as such, where we sort of maintain those relationships like a bank. We're sort of very much a point in time financier. We also provide bonding, or known as bank guarantees, which is sort of very predominant in the mining services industry, where you've got sort of engineering, procurement and commissioning contracts that require sort of advance payment, warranty and performance warranty bonding. And the main reason for that would be the banks generally tend to want full cash cover dollar for dollar. We sort of play in that market of sort of between 20 and 50% cash cover. So it does release a lot of liquidity back to the clients to be able to do more contracts. As mentioned before, we also provide offshore funding, but we also provide CapEx for offshore equipment purchases. So a lot of our clients that are sort of looking to import any machinery from overseas, the banks don't tend to like that machinery being sort of manufactured offshore, because the control factors are not there as there would be in Australia. So we would sort of cover part of that funding until the equipment arrives in Australia, and then obviously a traditional lender such as a bank could pick it up. Indirectly, we support our businesses jointly with the bank, which is sort of a lot of work that we're doing in the background, and that's sort of traditionally where EFIC has come from. It's their ability to provide a guarantee to the bank, and then the bank would on lend in some sort of shape or form, be it trade finance, be it a loan, or be it a line of credit. With obviously everyone's margins shrinking, with our ability and expanding ability to fund directly, we're seeing a lot less of requirements for the working capital guarantee, and we're seeing a lot more direct approach to funding directly to the clients until they sort of get to that quantum size where the banks are comfortable with balance sheet lending and sort of leveraging further against those. And so the final one we're talking about is the capital COVID export capital facility, which has been sort of a very exciting project for us to be involved in. The Minister has allocated $500 million worth of funding for Export Finance Australia to facilitate support to these exporters. And as you know, we'll just move to the next slide, Karen, sorry. As you know, a lot of our exporters were the first ones to be impacted, and we anticipate will be the last ones to come out of this hard times, you know, until the offshore markets open up and they have ability to trade. We're seeing pockets of that still happening. However, a lot of businesses have actually been heavily impacted by this. So this $500 million facility that we've got, there are certain key criteria to meet, which are sort of similar to our commercial process. And the key differential to this one is obviously with the businesses not being able to negotiate further contracts, and a lot of these negotiations have either been put on hold or delayed until further notice, inability to travel, which is a lot of the times when you sort of strike these relationships and pursue these contracts. The key difference on this particular facility is that there is no offtake. There is no mapping out of the facility according to a contract or a PO. So our basis of assessment are very much worked around historical performance of the business. So just to go through these key criteria with you, so it's minimum 2 years trading, similar to what we normally do, a turnover of 250. They need to be profitable operations in one of those last 2 financial years. And the key reason for this is that we're obviously understanding that business might be growing. They might have had, 1 or 2 years where they haven't performed well. But in the last 2 years, we expect some sort of profitable operations in order to get them through to this pandemic, and on the other side where the markets will potentially open up and they have ability to repay this debt. They're enabled to secure finance from the private market and banks due to COVID-19. So this has been an interesting one. We've been talking to a lot of our clients around. They are talking to their banks. The banks have ability through obviously federal government funding that's been allocated down to them to give them up to 250,000 liquidity assistance, which is a risk shared initiative. However, for a lot of them, that's just quite not enough. So we sort of look at loans between 250 to 50 million at the moment, and we're sort of seeing a lot of our transactions are in that sort of 1 to 50 million. So that's the size of the liquidity impact that we are seeing across some of these exporters. The loans can be utilised for creditor payments, working capital requirements to keep the business afloat until overseas markets reopen, potential diversification into other markets. So we've funded a client in Queensland that generally looks after Lorna Jane apparel, for example. They've actually sort of gone into more manufacturing of face masks for export-related transactions. So just to cover off, we've got the loan terms for these facilities are up to 2 years with the deferred repayments, and we sort of structure the facility over that time. And the key components for these, just sort of to give everyone a bit of a heads up of what the banks are looking for as well, is to have that cash flow done for more than 18 months now. So 24 months cash flow is the requirement, and that's sort of what the banks are expecting, and that's what we are looking for, and the business plan around the COVID-19 impact. Just to finish off very quickly.
Oh, sorry, go ahead.
Just a couple more slides. Sorry, David. So on this slide, which I believe you guys will be sharing this across with everyone else.
With your permission, yeah, absolutely.
Yes, of course, yeah. So Karen, just get to go to the next slide, please. We've got just examples in terms of the industries, and just to show everyone how wide our spectrum is in terms of who we support. So we've got wine industry, we've got IT solutions, we've got construction industry, obviously mining and so forth. But we also do sort of rag trade, and we also do small business operators such as Babe Australia, who provide and manufacture cosmetics. And a final slide that I've got here for you is just more of a resources in terms of how do you get in contact with us, what resources we've got on our system for you. So there's a bunch of ebooks that you can refer in terms of how do you build your international opportunities, although that's somewhat difficult. It's still sort of feasible through facilities such as webinars and Zoom. Strategies and how to get in contact with us to sort of seek that financial assistance and what we can assist with.
Fantastic.
Thank you,
Thanks
David.
so much, Aleks. It was great. Well, stay with us because I've got a question for you, but I'll ask Helen and Suzy to come and turn your camera on and join us as well. But Aleks, a question for you whilst these guys jump on board. With the allocation of the $500 million COVID-19 export capital facility by the Minister, I think it was in April, just gone.
Yes.
What activity levels is Export Finance Australia receiving? Are there many in the international education or the EdTech space?
Yeah, so we've been inundated with opportunities. Just to give you some stats around, I think our team has been burning the midnight candle is sort of really underrated. We've been doing 10 to 15 hour sort of type days. It's calmed down in the last couple of weeks, but since 1st of April to now, we've had about 636 inquiries in terms of volume. We've got about close to 90 opportunities in the pipeline, which are sort of a mix between COVID impact and not a COVID impact transactions. So it's just the way we assess certain transaction. Clients could be impacted by COVID, but still have lucrative contracts to get them through. And sort of we're seeing a large spectrum of, those that have no export markets to sort of dip into, to those that are sort of a little bit more varied between export market and domestic market, and they're still operating. So yeah, so very busy with education department, education sector transactions. We are working on two very large ones, which are sort of very much in that sort of education provision of 90% of their market is international students. They've got 6 campuses in Australia and 1 in India, and they're looking at avenues of sort of working cash flow facilities. The main reason for that is historically, a lot of these students will be paying for their seminars up front. Their accommodation will be sort of paid quite in advance, sort of for that covering those semester accommodation requirements. They have gone now to sort of monthly payments to assist everyone sort of get through this COVID impact, which in fact has impacted their working cash flow requirements. So
Fantastic.
we're looking at providing funding there.
There is a final question that I have for you. I think it is actually for you, which is, what advice could you have for international education businesses currently navigating uncertainty through COVID-19 and potential borrowing requests, and how that might affect their eligibility?
Yeah, there's a lot of noise in that in terms of how do you best present something. And Suzy, you mentioned sort of engaging a professional advisor for your EMDG. Likewise, we have seen clients that have engaged, working very closely with their accountants, with their brokers, putting a plan in place, in terms of being able to articulate how COVID has impacted their business, getting the cash flow for longer than 12 months. 12 months cash flows are sort of really not the way to go. We want sort of 24 months just to sort of understand post is, 3 to 6 months, whenever this pandemic passes, what is that going to look like for the client? We understand it's very difficult to achieve because, how long is a piece of string, but we can only really rely based on, what our clients' noise on the ground is, what their communication with their suppliers and clients are in terms of structuring those cash flows and having robust assumptions and being easily interpreted. So if you are saying, I'm going to be back online in 6 months' time, give us the reasons why, or what are you anticipating, what are you hearing on the market? So being sort of quite specific, quite structured in your approach and leveraging, experts in your market that surround you, such as government bodies, your accountants, your broker, to sort of facilitate those.
Thank you. And I guess, Suzy, I guess you're only using the EMDG grant, or maybe I did read that you're using some financing in there as well. Yeah?
So we have previously used an EFIC loan and fully paid it back, and it was great, thank you. And
You're welcome.
we're in the process of making another application as one of the under a non-COVID related piece. One of the other questions in there was, where's the line between sales and marketing? That is what we used our EMDG advisor for. We certainly would have not got the line right if it was just myself doing it, and they helped me establish a much clearer interpretation of that, which our Austrade auditor agreed with. So that's what the experts are for. Go there.
Fantastic. We have a rule that we use at EduGrowth, which is to finish on time, which means we've got 2 minutes. And there's a lot more questions than 2 minutes. So I'll ask you the final question, Helen, which is, there is a specific question here, which is, applications made after July 1 for the current financial year with a grant over $40,000 could expect 100% payout ratio. Is that correct? Is that just to clarify that?
That's not correct. And I did want to clarify
I'm reading
that.
a question.
So
Yes.
the payout factor was 100% for the previous financial year, which is the 18-19 ones, which we're currently auditing. For next year, there's been no announcement made in terms of extra funding. We obviously don't know how many applications we get until those close. I would listen out for an announcement in June about the initial payment ceiling and whether the minister's going to kick in any extra funding for the scheme at that point. And then we usually put out some messaging around, how the claim numbers are going and what the expectations are in terms of that payout factor. But yeah, there's no guarantee. We don't know how many claims we're going to receive. The key thing will be the initial payment ceiling that's announced in June.
Fantastic. That does bring us to that 2 o'clock finish, which is we have a rule internally that we do that. So Aleks, thank you so very much. Suzy, thank you so very much. Helen, thank you so very much for being here. And everybody who's joined us today, thank you. The slides will be made available, and that will also include people's contact details if you wanted to catch up with them. So thank you all very much for being here.
Thank you.
Thank you.